Yo, welcome to a brand new video. What up, everybody? I'm actually going to be going over a quick little lesson on time frame confluence and how important it can be and how it can save you from trades. Correction, save you from bad trades. So I'm gonna cover his name and I'm gonna cover his face. That's why on the left side over here you're gonna see half of it, right? I just don't know if he's comfortable with it. But he showed me a trade, right? He showed me a trade. I'm gonna show you what he saw and I'm gonna show you how I managed to correct it. So I'm going to show you what he saw and what actually happened and how it's happened to me and how it can actually happen to you. Now, this is what he showed me, right? When you're looking on gold from the 4-hour perspective, right, you can see that price is in a downtrend, right? You're seeing price break out of this range over here and create a lower low, lower high, lower low, lower high, and currently creating a lower low. What anybody would look for when you follow market structure and when you're looking for the trend in the markets is you're probably going to look for another pullback to continue that trend, right? The H4 is showing you that it's in a downtrend. So shout out to Reek. This is what he had right here. He could see that price is in a downtrend. Price is rejecting his level. He got 3 4-hour candles rejecting this level right here at 1947, right? So here is where he actually took a short position, right? He even grabbed his Fibonacci. He set it down, right? He set it down just like this, and you could see that price is, I guess, respecting it, right? So I fixed the Fibonacci. You can see price here is respecting it, I guess. So he comes in, he enters shorts, right, somewhere along in here, and we're going to drop down to the 1 hour, and you can see that price starts to actually go in his favor, right? And then news release happened, and we got this crazy flip, right? We got this huge flip in the markets right here where it just completely broke out, took him out, and he even lost more because of slippage, because how fast this candle was forming. In this instance, you can see that gold is in a downtrend. Anybody that would look to trade market structure would probably take the same type of trade, right? But again, this is just perspective, and this perspective is only coming from this little area right now on the H4 time frame. The important thing is here, right, and what I teach is in top-down analysis, right, and starting off from the higher time frames to the lower time frames, right, when you get your biases, the higher time frames are always going to quote-unquote rule, right? There's more data in the overall time frames, and this is where you really have to be careful, right? So we're going to look at this H4 downtrend, and we're actually going to see what we see on the daily time frame. What we see on the daily time frame is a completely different setup, right? I'm going to show you what I see. When I looked at this, I looked at the daily time frame, and I can see that price indeed had a downtrend, right? We can see that price up until this level right here. Oops, give me a second. We can see that price right here. I want to make it precise. There. So you can see that price right here was in this sell zone, right? When you have a trend line, you can see that price is in this sell zone, right? And you can see that price comes down, creates lower lows, pulls back, creates a lower highs, hitting this trend line, drops again, right? Gives us a little double top and then drops again, right? But then we started creating a higher high, right? We broke out of this and we start entering the buy zones, right? And this is pure technical analysis. We start entering the buy zones, right? And now we have a higher high. So what am I looking for now is a pullback and a rejection at some type of significant level. And that significant level was right here. Why? Because you have strong rejections here, here, look at this wick right here, even from the downside, right? We have these levels right here, these levels right here, and as proven right here, right? Not only that, what really helps me use this area and makes me put the final say on this is where I want to go long is when you take the Fibonacci and you go and you place it from low to high, you can see that we have basically the perfect rejection at the 0.38. So we're building confluences. You can see how price hits the 0.38 once, twice, and then flips and then starts to go bullish. Right, so to me, this whole, just based on the daily time frame alone, this whole trade is completely different. The daily time frames tell me what's going to happen, right? All I'm getting is where I'm going to enter, and it's going to happen down on this level, right? So this is where time frame confluences is so important, right? Higher time frames are always going to prevail. Now, keep in mind that this is a day trading style. I'm sure scalpers feel a little bit different from that, or maybe other people in general feel a little different. But in terms of market structure, structure, time frame confluence is so important, and you really need to pay attention because the higher time frames are always going to have more data to really tell you the true trend of the market. So for me, I'm looking for longs while some people are looking for shorts. So let me tell you how I would have gotten into this trade. When price comes down here into my area of interest, we have a double bottom formation, which is a bullish pattern, right? And price ends up engulfing. We would have entered as we started breaking above. And currently this trade, and I would have aimed probably for these highs right here. And this trade currently is in profit and flat topped. So this is how this trade would have worked out currently. I wanted to do a quick, what time is it? 7 minutes. I want to do a quick 5-minute breakdown of 5 minute less on time from confluence. I hope you guys enjoyed, and I'll see you guys in the next video. Deuces.